Hello, fellow Rebel Capitalists. Hope you're well. I'm here with my good buddy, Cory Klippsten with Swan Bitcoin. There you go. Is that your logo?
Well, you got to hang the swan on them.
Okay,
like
cool.
It's a basketball thing. You got to finish with the. It's not a gooseneck; it's a swan neck now.
All right. So is that how you came up with the logo? Because you're a big basketball fan?
No, we just have a really amazing UX guy that built a beautiful logo. The only thing that I added was he had the beak coming to like a round point, and I said I want it to be sharp, but that's the only thing that I added to the logo.
Okay, very cool. So let's get into it, man. I've been going back and forth with the Bitcoin community on Twitter, and whenever I do that, of course, I just get completely crucified. And it's what I enjoy doing most, or what I enjoy most about the back and forth is just the psychology and trying to understand the psychology behind people's views. But in doing so, Lynn, our good friend Lynn Alden, reached out to me and she said, George, I've been reading your tweets and you really need to get Cory on your show and just kind of go back and forth, because he was one of the people that really called out a lot of the crypto bankruptcies or frauds, if you want to go that far, that we have seen recently. And he can really do a deep dive there and then maybe analyze some of the opportunities that may come as a result of this kind of complete collapse. And I think we discussed that briefly through DMs, how, I'm always a contrarian. So when everyone now wants to pile on top of crypto, or they want to throw Bitcoin in that category and say, oh, this is dead. I told you so. I told you so. I told you so. For me, that gets, it makes it more intriguing. And I'm like, okay, well, where's the opportunity here? If everyone hates it now at 65,000, I was very, very concerned that there was hysteria. But now it's like I'm getting to the point where it's the opposite. So anyway, let's start with, maybe we go back a year and some of the red flags that you saw with some of these crypto firms. And let's dive into those insights and we'll go from there.
Yeah, absolutely. So, first off, I just, by way of background, so you guys kind of know where I'm coming from. Like I used to work for really big companies like Microsoft, Morgan Stanley, McKinsey, Google, got a University of Chicago MBA in finance and international business back in like 2004. So I've been in the game for a little bit. I also was a broadcast journalist in the late 90s before getting into business. So I was a local NBC TV reporter, have a journalism undergrad. So I kind of come at it from that, that perspective of like, if you're going to say something, you better have the goods. If you don't have the goods, you better caveat that and maybe ask a question. So I really try to apply journalistic standards even to my tweets and to everything that we put out from Swan, which is actually a pretty big media operation as well. So I just wanted to kind of share that. So what happened in the bull run of 2020 and 2021 is unlike the wishes and dreams of Bitcoiners that thought maybe we were done with the crypto scams after the ICO bubble of 2017, 2018. It turned out that they just sort of all the creeps just kind of scattered and reformed with new narratives and came back. And so this bull run for Bitcoiners was really not very enjoyable because it was so noisy with all the crypto scamming going on and all this stuff pumping, like the ape pictures and, Solana and all this trash that we know is going to zero in the long run was kind of taking a lot of the shine away from Bitcoin on the way up.
But was it adding to the liquidity that would help bolster the price of Bitcoin short term?
Not anymore. I think there was maybe a little bit of an argument that could have helped possibly as far as some of the ICOs, because it was very retail driven in 2017, 2018, that it's possible that could have been a net positive. It still may not have been. And frankly, people have been around Bitcoin since, 2011, 2012. They saw it as a dramatic net negative, and that the Bitcoin bull run would have been, more robust and maybe less of sort of, a spike and crash vibe that we had in 2017, 2018, had there not been all of this excess leverage essentially going into the non-Bitcoin cryptos.
Yeah.
And so we kind of saw that again. And this time it was layered on with a ton of institutional participation, from these crypto VC firms with about $40 billion of LP capital deployed into those crypto scams. And tons of leverage. As we've seen, the leverage unwind has been kind of the main theme of the last, what are we, into November. So, you know, the leverage unwind started to be obvious that it was going to happen in March. And then it finally did happen in May. And everything since then has basically just been the results of the unwind kicking off in May with the collapse of Luna and UST. So we can kind of get into it a little bit, but I would just say broadly, it was a lot like talking to my friends on the Bitcoin, on the like the Goldman distressed bank loan sales desk back in like 06, 07. And, you know, I was in New York at the time, and everybody that left a job would immediately, you would leave a job and get paid 2 to 3 times more. Just switching seats. Even if you went from banking to banking, if it was anywhere close to private equity, you would double or triple your salary. And consultants could jump over to private equity or jump over to banking and immediately double or triple their salary. And so I just asked my friend Cameron, who's been on that desk for 18 years now, like, what is going on here and what's going to make it end? And he said, I don't know what is going to make it end, but this train will definitely go off the rails at some point. And it's, you know, we were even back then, you know, reading Black Swan and talking about fragility and things like that. And we were just like, the system is so fragile. We don't know what's going to make it collapse. It ended up being subprime that kind of sparked it, but the thing was already a house of cards. So this whole crypto thing and this leverage thing, and in particular, this idea of taking customer deposits and then lending them out and rehypothecating them. And you can't, once you lend to one counterparty, if they also lend it out, it's done. You have no idea the daisy chain of who actually has the stuff. Right. So none of these people actually know what's going on, which is why as each one of these businesses starts to collapse, the first tweet is we had no net exposure. The second tweet is we had minimal net exposure. The next one is, oh, we had a lot. And the next one is we need $1 billion by Monday. And the last one is, oh, we're bankrupt and you can't take your money out ever. Right?
Yeah.
We've seen this. It's this. BlockFi had the same 5 tweets. Voyager had the same 5 tweets. Celsius had the same 5 tweets. Genesis had the same 5 tweets. Like, they don't know where their exposure is because the stuff isn't regulated. There's no transparency, and their lending standards to each other are basically just like, I love you, bro, on Telegram.
Yeah. Now, this may be a stupid question, Cory, but is this?
There are no stupid questions in crypto, only stupid answers.
But so, I mean, to me, this is like kind of off balance sheet stuff that they don't really know, you know, how extensive this gets. Is that because it's off blockchain, or is that because, and I'm talking about the Bitcoin stuff, or is it because it's once there's a certain number of transactions from a counterparty, then it becomes rather opaque?
I mean, there's not much of a distinction here between just, you know, prop trading desks and market makers and TradFi versus what's going on in crypto. I mean, if you don't watch your counterparty risk, you know, basically you're fragile and you can collapse. And so I think that's just what you've seen is, you know, it started out with the collapse of Luna and UST, which was an actual Ponzi scheme and very obviously a Ponzi scheme. And we can get into that a little bit, blew a massive hole in the balance sheet of some large market makers. So they call themselves market makers. 3 Arrows Capital was the one that kind of went under and then blew a hole in a bunch of other people's balance sheets. The reason that 3 Arrows Capital was important is when they took massive one-way directional bets on a Ponzi scheme and then it collapsed and then they lost all their money, they were actually a place where a lot of people actually parked their capital. Mm-hmm. So they claimed to be able to do sort of, you know, risk-free arb trading and will return you, you know, 0.5% per month or something. So it was always, you know, them, Amber, obviously Alameda, they all kind of had the same pitch, really going back to 2018, where we can deliver you 6% on your cash, essentially risk-free, because we're so smart and we just make that off of risk-free arb trades. And of course, none of them actually could do that. And the only way to keep supplying that, and they just wanted it for trading capital so that they could get super rich and buy yachts and things like that, was to actually take directional bets and get out of risk-free arb trades. Or they were maybe trying to do arb trades, but don't actually understand how to do them because most of these guys have either 0 or 1 to 2 years of actual Wall Street trading experience.
But as far as from the standpoint of transparency, assuming this was all done with Bitcoin on blockchain, would you be able to track those transactions? Let's just assume for a moment it was.
Yeah.
would you be able to track it, or is it just so
No,
there's so many things
no,
going
no.
back and forth that it's
Yeah,
almost
yeah, yeah. And
impossible to
most
track
of
it
it's
all?
not Bitcoin anyway. Most of it's all the altcoins. Most of the
Yeah,
stuff is
but
happening with
just
the other
again,
stuff.
assuming that it was Bitcoin, it would,
Hmm.
although it's there, each record of the transaction is there because there's so many records, and it is well, you can't tell exactly who, because there's not a name there,
So
going back and
the
forth. It just
nature of the Bitcoin network and the Bitcoin blockchain and the way that unspent transaction outputs work, which is kind of like the balances in different accounts, would not have helped in this case.
Right.
As an
Okay.
example, FTX and Alameda, which purported to have a Chinese wall between them. So this is the prop trading desk / market maker of Sam Bankman-Fried is Alameda Research. And then there's the exchange side of the house, FTX, but they actually all worked in the same room in a penthouse in the Bahamas with their screens facing each other. So, no separation whatsoever. And it also turned out that people who were wiring money to FTX this whole time actually wired it to Alameda. And so there was no separation between these. And so this
not
Bitcoin,
even with the bank accounts, which is unbelievable.
No. So the Bitcoin that people were trading back and forth on FTX's exchange were literally just digits on screen. There was no actual Bitcoin. These were just IOUs. There was no actual Bitcoin at all. It was just their own records in their own database that people were trading. They didn't have the Bitcoin. Yeah. They blew a hole in their own balance sheet, probably at the same time, probably when a bunch of firms blew up back in the spring, they probably blew up as well. It looks like that's when they transferred over $4 billion of crypto from FTX to Alameda to fix the hole in Alameda's balance sheet. And from then on, they were just gambling all summer and all fall, trying to figure out some way out of the hole. So all of this pretend effective altruism of Sam Bankman-Fried and mainstream media's BS around him being the JP Morgan of crypto and how he's going to save the industry and all this crap that they bought hook, line, and sinker in a very self-serving way, given the amount of advertising money that FTX was sloshing around and the hundreds of millions of dollars of campaign donations over the last couple of years that Sam Bankman-Fried and his fellow executives have made. It was just a very willing and pliant mainstream media that went along with the whole charade. And very few people were even breaking through and even able to get on TV and say anything. I was lucky that in the aftermath of correctly forecasting Luna's collapse and then correctly forecasting and frankly, strongly encouraging the collapse of Celsius in May, which then collapsed in June, which was also another obvious fraud shop and Ponzi scheme. I was able to get a decent bit of national media coverage and get on CNBC and Yahoo Finance and some of the stuff over the summer so that some people who were listening were able to see that FTX was full of shit. Yeah, I guess that's what we're saying now.
So if SBF bailed out crypto to basically bail himself out,
exactly,
go back, let's say 3 months or whatever that happened, and this is when he's the Warren Buffett and JP Morgan and everything. Do you think that the CZ dude is doing the same thing now with Binance? Because I tweeted that out the other day. It's like, wait a minute, this guy's, and now all of a sudden the media is buying this hook, line, and sinker. That, oh, great, well, CZ's coming in and starting this $2 billion fund, which now it's he's putting in $2 billion, and he's coming in and saving all these crypto assets. And it's like, well, wait a minute, haven't we seen this movie before?
Mm-hmm. Yeah, so there's two reasons to do it, and interestingly, I mean, he may be completely insolvent and it may all crash down. It's very possible, but there is another reason to do it, which is just that, if it makes you $5 billion to spend $2, then you do that. It could just be a simple economic calculation.
So you don't have a base case on which it is right now?
Not really. No. I mean, it seems like they have not taken big directional bets and they've operated with, more transparency.
Yeah.
In the crypto world, assigning anyone a rating above 0 and as far as transparency is very difficult, but 0.2 instead of 0.0 versus Bankman-Fried. It seems like Binance and Coinbase play the casino game the way it ought to be played, which is just be happy with the house's rake. Yeah. And just take the 6% or whatever it is, and just take that money and don't use that. Don't get high on your own supply and, bet it all on black, every night or something, which is what Bankman-Fried has been doing.
So what are, you said you called quite a few of these collapses here, which is fantastic. What were the red flags that you saw
Sure.
that made you confident in making these statements? And because I want the community and the people listening to understand that well, so they can maybe use the same tools in the future.
Yeah, sure. Yeah, I mean, some of the stuff is just, you can get it in a freaking book of maxims on the back of anybody's toilet. It's
It's
like,
too good to be true, right? I
it's
mean,
like,
that's kind
well,
of,
it's watch what they do, not what they say, is a big one, and cui bono, who benefits. So, like, who benefits was the main thing that sparked my interest in what was actually going on with Luna back in March. So this was when a bunch of Bitcoin influencers, unfortunately, were promoting Do Kwon, an obvious fraudster if you even hear him talk for a few seconds, and his plans to buy a bunch of Bitcoin for their treasury reserve to kind of backstop this algorithmic stablecoin. First of all, there's no such thing as a decentralized algorithmic stablecoin. It will always have a trusted third party conducting open market operations to try to defend its peg. It can never be decentralized. That's impossible. No one's ever solved the Oracle problem. So even to take the price information of where the dollar is and port that onto, from meat space into the digital space is something that you can't do without someone actually enacting that and making that happen. So the whole premise of it was false in the first place, not to mention that even, and then if you do have a trusted third party involved kind of managing it, then you're by definition a security. So this is what happened with Basis, which was a big Silicon Valley backed attempt at a stable coin back in 2018. And they, spent 10% of the money and then refunded the rest after they realized the only way to do this was basically you would be a security if you had a dollar-backed stablecoin. So he ignored that. He tried it under a pseudonym, stole the code for Basis, called it Basis Cash, and blew that up. It got a little bit of AUM, like 60 or 70 million bucks, and then blew up and went to zero. And then he tried it again without really changing anything about the plan at all, and tried it with UST, which was Terra US dollar, Terra Luna being the ecosystem of his ship coin Luna. And so they built that up in 2021. A lot of people made a lot of money on it. So even after it collapsed, a lot of these insiders like Jump Capital, Pantera, Galaxy made millions to billions of dollars in the case of Do Kwon himself, and Jump Capital, multiple billions of dollars that they pulled out of this pump before it collapsed and went to zero. So fast forward to March, which is when it really hit my radar. Again, it was only because it was around Bitcoin. I'm not actually shitcoin PI, like caring about the 28th ranked coin and why it's a scam. I just assume they're all scams, and only if it starts to show up on my radar in Bitcoin conversations do I actually pay attention and get involved. So it was bothering me that Bitcoin influencers were featuring this guy on their shows and saying that this is good for Bitcoin. So some
Cory, everything is good for Bitcoin. Didn't you know that?
Yeah, well, in the long run, it's probably true. So there is actually a case to be made for that. But we can come back to that after the show, maybe. So I just sat down. I think it was like, I don't know, it was like mid-March or the third week of March or something. And I sat down to actually try to figure out what was going on, because it just smelled rotten to me. I didn't trust this guy when I saw him, and I didn't like that these, supposed Bitcoin influencers like Anthony Pompliano were out there promoting this altcoin and saying that this was good for Bitcoin. And it didn't take more than 45 minutes. In 45 minutes, I had solved exactly what the mechanism of the Ponzi scheme was. It was incredibly obvious on its face. And again, what it came down to is like, who benefits? And so what was happening is they had created this protocol, supposedly a DeFi protocol called Anchor. And what happened is if you checked assets into Anchor, it paid you 20% interest.
Okay.
And the highest interest was paid by if you checked in UST. So their dollar algorithmic stablecoin. If you check that into the Anchor protocol, that's when you would get the 20% interest.
Because they wanted more demand for their own crypto.
Exactly. So they were trying to make the Luna UST ecosystem look vibrant to pump the price of Luna, because they had printed the billions of Luna tokens out of thin air and given it to themselves, and so they could sell into the pump by making it look like the market cap or the AUM of the stable coin was rising fast.
Yeah, you know what's incredible, Cory? And I hate to cut you off, but did you listen to that podcast with Bloomberg and SBF where he talked about the black box?
Mm-hmm. Yeah, of course.
This is exactly what he described. Exactly what you're saying.
It is, but worse. It's even worse than what he described. That one in particular was like even worse than the magic box. At least the magic box thing is like, oh, it's just speculation, and you're not bribing people to put money in there knowing that it's going to collapse. Like, this is actually even worse and completely criminal in my view. And so what cued me is that the Luna Foundation Guard, so this is like this, Do Kwon led group with, the guy that runs Jump Capital and some other stuff, and Jump, were both topping up the Anchor reserve by hundreds of millions of dollars at a time. They topped it up by like over $1 billion in Q1 to keep paying that interest. And they said it was for marketing. That's why they were paying it. And I was like, there's no way you're not giving away $1 billion for marketing. I could put that, think about that. You could buy the naming rights for multiple stadiums if that's what it was for. Obviously, these guys are pulling more money out of this than what they're paying, clearly. Right. So otherwise you wouldn't do it. And so that's when it just became transparently, clear that this was a Ponzi and they were just bribing people to check their money in, and that the whole thing was going to collapse at some point. So, and then it did collapse. It collapsed on May 9th.
And then in chronological order, which one was next? Was
Celsius was next. Yeah. So Celsius was next.
What were the red flags there?
So what happened with Celsius is they stupidly bragged publicly that they had pulled over $500 million of user funds out of the Anchor protocol the weekend before it collapsed. They got it out on Saturday, and Luna UST collapsed on Monday. And so I started immediately going hard at them and saying, why did you have your users' funds in an obvious Ponzi?
Oh, because they were helping their buddy pump it.
They're not supposed to be taking these directional bets on things, right? They're proposing that they're a savings platform, that they're safe, that they're better than banks, all this kind of stuff. And, so I was poking at that and going hard at that for a couple of days. And then on like the 14th or 15th of May, Mashinsky, or Muskamsky, as we like to call him, Skaminsky, if you're more into that, he put out a video claiming that, Bitcoiners were responsible for 30% of Bitcoin being lost historically by promoting self-custody, and that your Bitcoins are much, much safer with Celsius. And, here's $100 or $200 of our Celsius token if you'll deposit your Bitcoin with us.
All right.
And I was like, oh my God. So one of the biggest red flags is anytime anyone in crypto actually lies about Bitcoin, they're always scamming. Sometimes they're stupid. 5% of the time they're stupid. 95% of the time they're lying.
Yeah. When they go, it's like they go against the core principles of what supposedly makes crypto and Bitcoin great. You know what that reminds me of, Cory, is this drama with Sam Harris. I don't know if you've been following. I don't want to go off on a tangent, but that's kind of what
I have been following it. He was another parent at our old preschool in Santa Monica before we moved to the burbs. So I did. Yeah,
it just seems, he was he lost his principle of free speech.
Yep.
Just because, well, if it's about Trump or something like that, then free speech doesn't apply. And it just reminds me of what that guy said. Losing the principle of if it's your keys, your Bitcoin type of thing. Yep. Than saying that all those people that thought that were stupid, that's a big red flag.
Yep. Yeah, exactly. So, it's like, if you aren't a bad risk manager and you aren't lying about your risk management, then you can't have no bank run. So obviously these guys were lying. It turns out they actually blew themselves up in the summer of 2021 and they got rescued. And it looks like, I won't name names here, and again, this is all sort of alleged, and this is just my own piecing together the facts of what I think happened, but I was able to find records of transactions of real estate between the lead investor that didn't announce the round until November of 2021, already transacting with Celsius around the types of things that would happen if you were a big investor in the company as early as May, June of 2021. And then they recruited the huge pension fund to come in at a much more, I would guess, significantly elevated valuation. So I think an institutional investor whose partner came from BlackRock came in, and I'm sorry, from Blackstone, came in and did a sweetheart deal to rescue Celsius in the summer of 2021. And then basically tried to dress them up, clean them up a little bit, and then probably got out of their cost basis, probably sold some secondary. Who knows what that second tranche was when they raised that $3.2 billion valuation in November of 2021. Brought in the 300 or 400 million from the Canadian pension fund in that round. And that was how they kind of papered over their loss. They were on the wrong side of the GBTC arb trade, like a lot of people were. That's probably what blew up Three Arrows Capital initially, which is why they started gambling with all these funds and offering the sweetheart yield. They were trying to gamble their way out of a hole that they blew in their balance sheet way back in summer of 2021. So it's funny now that we're coming, and we'll get to Genesis and DCG at the end of this. But at the end of the day, all of the holes in all of these companies' balance sheets, for the most part, track back to the flipping of GBTC from trading at a premium to NAV to a discount to NAV, because that's where all the yield in crypto was coming from until until spring of 2021.
Corey, if you could go into that, I'd really enjoy it, because I won't name any names here, but when I left Medellin because of the draconian measures here for the COVID lockdowns, I tried to find any place on earth that just had some freedom and some normalcy. And it turned out that was in St. Bart's. And a good buddy of mine lives there. His name's Hugh Hendry. He was a former hedge fund manager, and all of his buddies in St. Bart's, they're all investment bankers and all these things. So I became pretty good friends with a lot of them. And like I said, I won't name any names, but one of the guys there, he was just making a killing on this arbitrage play. And he kind of walked me through it, and I was expecting something just incredibly sophisticated, because this guy is worth hundreds of millions of dollars. And he's like, no, he goes, it's pretty easy. He goes, I just buy shares from Grayscale at NAV, and then I just flip it like 6 months later at like a 30% premium. He goes, no one's really caught on to it yet. And I started to think, I'm like, okay, well, doesn't Grayscale know they're doing that? And is that ethical? But I just kind of, I don't know. But sounds like you were looking into that as well.
Listen, man, it's the same story of every bartender in Chicago. Every bartender in Chicago made a good bit of chunk of change flipping one or two houses in Phoenix and Vegas back in like 2004. Then they flipped 4 houses in 2006. And then they were flipping 12 houses at the same time in 2008, and they lost it all, and they're back bartending in Chicago. Right. Yeah. So basically the problem with these things that are clearly unsustainable is so many market participants have their biggest bet on when it collapses. And that's what happened in 2021. It was so many people piled into that trade. It was in the middle of a bull market. People were going nuts on this trade, and it flipped negative and caught them all off sides when more of them were piled into the trade than ever before, which is how these things always happen.
So they had all these shares at NAV, expecting it to trade above NAV. So then when it flipped back, and they probably had
and BlockFi, Celsius, Three Arrows Capital, Alameda, Voyager, all of their yields to their customers were dependent on that free arb continuing forever.
Oh my gosh.
So they all blew up, and some of them papered it over and were able to survive from 2021 into 2022, but they were all trying to dig out of a hole ever since.
Wow. And think about how deep that runs, because CNBC, I would argue, is at least ethically liable for that. And, because they were promoting Grayscale to such a significant degree. And I mean, it's just, well, you could point the fingers at a lot of people there, a lot of entities.
Yeah, I mean, I don't know if CNBC was directly saying like, hey, do this arb trade, or maybe they were, but
no, they were just really heavily promoting the Grayscale Bitcoin Trust. And again,
yeah,
I don't know that I would say they're directly liable there.
yeah,
I guess they can, if it's a legal entity that's currently legal, why shouldn't they take money from that group in a free market?
yeah,
But that was definitely, I guess, a way that Grayscale could continue to make sure that they are trading at a higher level than NAV,
yep,
which allowed that to really go on a lot longer than it maybe would have.
yep, absolutely. So getting
I
back to
didn't
where we
realize
were in the
that was the whole catalyst
2022,
to everything.
yeah,
That's really insightful.
that was where it all kind of went off the rails for everyone, and we didn't find out about it until 2022.
Hmm.
So Celsius then stopped user deposits, or sorry, stopped withdrawals, and basically, on the path to bankruptcy, and just never functioned as a business again, starting June 12th. So it was, from Luna collapsing May 9th, Celsius collapsed June 12th. A lot of people saw that Celsius was going to collapse. Not many people realized that a company like Voyager, which was public in Canada, that had a, quote unquote, credible CEO, very different from what you saw with Mashinsky, who kind of has a sordid past, and, his whole bio is basically full of lies. Ehrlich was a well-known guy, pretty well-liked guy, the CEO of Voyager. And what they just had was terrible risk management. They had parked over half of their user funds with Three Arrows Capital, had not done the diligence on these guys. I mean, Three Arrows Capital is like two kids offshore, running an opaque shop that basically just has social proof and no other reason to put money with them. It's just everybody says, oh, those guys are smart and they know what they're doing, but that was it. There wasn't. So people that actually have effective risk management had pulled their funds from them a long time before and wouldn't lend to them. And the same thing happened. Smart shops actually pulled their funds off of FTX a long time ago, wouldn't lend to Alameda, going back a year ago. I've seen lots of stories of people saying like, hey, they couldn't answer our questions, we couldn't deal with them. So it's not like you don't have what I'm saying is you don't have an excuse if you're giving these people, your users, money. So BlockFi can't blame Sam for being a fraud. They didn't do their job. Voyager can't blame Three Arrows Capital. They didn't do their job. All of these people that signed up, all these people that signed up to do something for their users are culpable and, frankly, should be punished.
Where are we now with Grayscale, because they're trading at such a massive discount to NAV? Is that because the market is kind of sniffing out something there where they might not have the assets that they say they have?
So I don't think so. So there may be some of that at the margin that is worried about something like that. But for the most part, it's just not a good product versus the other products that are available. So, the reason that it started to move from a premium to a discount to NAV is because a lot of other options came to market.
Okay.
I mean, the rise of my own company, for instance, Swan Bitcoin, swan.com, we sell an absolute ton of Bitcoin now. You had NYDIG and the rise of NYDIG and serving all their institutional clients, selling to companies like Mass Mutual. And then you also had the banks, so JP Morgan, Goldman Sachs, and Morgan Stanley. Those firms all created their own private trusts for their high net worth clients and their institutional clients at much lower management fees than Grayscale.
Okay.
So you didn't have to buy GBTC anymore at 2% annual management fee based on the NAV, by the way. So now you're paying like 4%. And so there was just a lot more places to buy Bitcoin. And if you needed to do it with a lot of service, you had, there was a well-backed startup that started up to be a prime broker for crypto. I think it was called Tagomi, and Coinbase picked them up, and it basically became like Coinbase Prime or Coinbase Institutional or something. So they were better able to interface with institutions and high net worth individuals. I think Saylor famously did his first first 6 months of Bitcoin purchases for MicroStrategy using Coinbase's, sort of prime broker. So there's just way more options than there used to be. And it was a crappy product just based on price alone. It was just way too expensive at that 2%. And I think that's what made it start to crater versus NAV.
But the bottom line is you think that most of the collateral damage there has been done
to GBTC.
Yeah.
Yeah.
Well, in the collateral damage with all the other counterparties there.
I think the market is the best signal for.
Yeah.
I think that Coinbase has the Bitcoin in their vaults. I've been public about that. When I see something that I think is definitely rotten, I tell you. And, if I get enough questions and am forced to have an opinion on whether I think something is okay, like I think that GBTC and Coinbase have the collateral, to the Satoshi for what's supposed to be in the GBTC trust.
Okay. So let's move on to self-custody.
Sure.
Because when we have now seen a lot of these blow-ups, a lot of the Bitcoin Twitter folks come out and say, well, the solution to this is self-custody. You got to do this 100%. And if you would have done this from the beginning, we wouldn't, or you would not have had any problems. My issue with that is that if you take it to an extreme, it creates a paradox, in my opinion. And the paradox is, in order for Bitcoin to be something else other than a digital asset, let's say to be global money, you can't have global money if the entire money supply is in people's back pocket. That will never become global money. That you have to have credit, you have to have liquidity, you have to have velocity, and you're not going to get that when 100% of the Bitcoin is just in cold storage. So what's your view there? And then maybe we can try to parse out how we get from A to Z.
Yeah, sure. So, I mean, the headline here is like, in monetary theory, and particularly the views of the Austrians, if you're going to see the monetization of a new asset like Bitcoin, you're going to be first, sort of a speculative store of value, which is where we are now, where there are people saying like, hey, I think eventually this is going to be a stable and large store of value that 8 billion humans can use if they want to. And then you're going to become sort of a reliable and trusted store of value. In my view, that doesn't really start to fit the bill until you have a market cap of like 20 trillion, like 2x what we think gold is. I think it'll be like, oh, okay, that's pretty stable. I can actually save a good chunk. That can be like 20% of my portfolio, not 1%, that kind of thing. So it's way up from here. I think that's, probably into the decade that we'll look at Bitcoin and say like, okay, that's a pretty solid, good, mature store of value.
Do you think you can get that to that level? Or do you think the probability is high that we can get to that level if things in the major economies are not priced in Bitcoin?
Yes. So the first step, store of value. Second step is what we were just talking about 30 seconds ago, which is medium of exchange, which is spending Bitcoin and using it for transactions. And third, the last step is unit of account, which is actually pricing things in Bitcoin, pricing things in Satoshis. And that's the order that these things logically will develop and kind of historically have generally developed over time.
Where do you think credit creation is in that order, Cory? Because the way I think about this is I have a hard time understanding how you could denominate everything in gold or Bitcoin or what have you. If you weren't able to get a mortgage, let's say, in Bitcoin, if the price of the house was denominated in Bitcoin. But then I run into an issue where I say, if I'm incredibly bullish on Bitcoin, if I think it's going to go from 100,000 to 1 million, let's say in the next 2 years, there's no way I'm going to borrow Bitcoin to buy the house in the first place.
People do if they have life needs. And so the way I think about this, and this is actually, I put my money where my mouth is, because this is how I plan the strategic addition of products and services for Swan, is based on my best estimation of when I think the market will demand things related to Bitcoin. Okay. So I personally have done nothing to date with Swan really related to medium of exchange because I think it's too early.
Okay.
I'm placing venture bets on, I probably invested in 10 or 12 medium of exchange lightning type companies so that they can build over the next few years. And what I think is the only people that really want to spend Bitcoin today are people that had conviction and deep understanding of Bitcoin and bought in size in like the 2012 to 2014 timeframe, such that 95 to 99% of their net worth today is Bitcoin. The only people that are spending Bitcoin today are like hobbyists and industry people, and a few people for whom Bitcoin is the best tool for the job, like some pockets of like remittance or super weak local currencies, things like that. But in the Western world, people we bump into, the only people that are looking to spend Bitcoin are people that are filthy rich in Bitcoin versus their other assets. And so what I think is going to happen is I think this next cohort of the people that had conviction and bought in size in 2016, 17, 18, maybe early 2019. So the people that got conviction from studying because of the bull run in 2017, they backed up the truck when it dropped down to 3150, 3,000, 4,000, 5,000. Maybe the earliest people of the class of 2000, the Len Aldens and the Michael Saylors and the Druckenmillers and the PTJs and those people, if you bought in enough size and had that conviction, or we're getting in like 2016, 17, by 2026-ish, if there's another bull run, which I fully expect we'll see another one at some point, now you're going to have a cohort that I think is probably 10 to 20 times bigger in number of people that are basically Bitcoin rich. And when it comes to college expenses, when it comes to buying a house, when it comes to whatever it is your needs, you're going to have to spend. And that's that consumer demand, and the demand for spending Bitcoin is what's going to create the Bitcoin as a medium of exchange industry, which is in its infancy today because there really isn't a market for it.
And do you think we can get up to that 20 trillion in the interim, which will decrease the volatility and make it even more transactional from a standpoint of people are much more willing to borrow in it?
Not by 2026. I don't see that happening that fast. I think that, I'm not going to back off my very long directional thumb in the air forecast of sat cent parity, which means $1 million a coin by 2030, which is something that I still think is pretty reasonable given the track record. And that's way less growth than we've seen historically. And it seems very possible given all the things going on in the macro environment. I mean, it's an S show out there. But what you'll see is basically the early stages of the medium of exchange use of Bitcoin kind of on the flat part of the S curve and starting to come up while you're starting to see, maybe the steep part of Bitcoin as a store of value develop. So you can actually have venture scale returns to companies working in medium of exchange, even if only, 3% of Bitcoiners are spending Bitcoin.
Right. And how do you think you'll get that increased adoption if the price is devaluing against the dollar? Like as an example, you always hear about Gresham's law, which is absolutely true. The good money is going to chase out the bad. And I'm not saying that Bitcoin is not going to, get to 1 million or whatever it is. It's all just based on probabilities. But if you look at Bitcoin and gold, for that matter, it's actually decreased in value relative to the dollar over the last, I don't know, let's say just 6 months to throw out a number. So what is going to incentivize greater adoption to start getting that market cap up to a level where you decrease volatility? And then in my mind, you're able to introduce lending. And then that's when you can start pricing more and more things in Bitcoin, which will take it from where it is today to having a greater probability of actually being money. And then I want to circle back into the cold storage deal, because then you're going to have to start introducing counterparty risk.
Yeah. So a couple things. So one, I'll take the second part first, because when you actually have an asset that people can take full custody of and there's no lender of last resort for Bitcoin, right? Nobody can step in and backstop it because you can't print more. And so what you're going to see is anyone that goes too far out on the risk curve with their banking practices is going to blow themselves up over and over and over and over and over
Yeah,
again.
but what I want to point out is just a little bit of irony here, because Lynn
Yeah.
said the same thing today, and I said it is true. But one of the pushbacks I always get when I say, okay, Bitcoin, if we use it full reserve, is going to limit growth to a certain extent. There's going to be costs. There's going to be benefits. And everyone says, oh, no. You can never have a shortage of Bitcoin because it's just infinitely divisible.
Mm-hmm.
And then Lynn comes in and says, yes. And to your point, it's going to reduce the bailouts because you can't create more of the base money. But if you want to use that same argument, you could say, sure, you can bail out as many people as you want because Bitcoin is infinitely divisible. Now, I get it that
no,
you
that's
would
not
have
true,
$1
because
million.
this is the Francis Coppola sort of mistake, where she's like, oh, you can always have more pizza, but there's only 21 million Bitcoin. So even though you can cut the pizza into infinitely more slices, there's still never more than one pizza.
Yeah.
So yeah, that's just kind of a trick that you got to get comfortable with. So there never can be more than 21 million Bitcoins. So even if you divide a Satoshi by 2, it's still only worth 1 Satoshi.
Oh yeah, I understand that.
Yeah.
But one of the pushbacks I have is, okay, if you've got
so I understand. So there's this sort of nebulous and unquantifiable view that it is highly net positive that we have easy credit and that fuels growth. And I would say that the counter to that, which can't be argued against with statistics either, because there's just too many variables and like all we could do is model it, is that if the money is actually good and the credit is not easy, that our decisions will be better. And further, that if we definancialize the economy and don't race toward the 50% share that, Wall Street and non-Bitcoin crypto people would love. They want everything to trade all the time, 24/7, and for all of us to be super sophisticated hedge fund managers, or better yet, outsource that to me for a fee. That's really what they want. If you actually bring the financial share of GDP, the financial sector share of GDP, back to historical levels of 3 to 4%, and people can actually just be productive and do things that aren't rent seeking, beyond just, smart allocation of capital to things that actually deserve capital. That's really, all the financial industry should do. Shouldn't be playing all these games with all these, Raptor 7s off the balance sheet and crap like that, right? What Bitcoiners believe, and what sound money aficionados throughout history have basically believed, is that the economy will have less booms and busts, will have less misallocation of capital, and that will basically be having something like much more steady, much more predictable, and higher average growth and productivity globally.
Right. I just think there's something in between. And what I would say is you've got full reserve banking with a fixed money supply, let's say 21 million. And then you've got what we have today, which is the complete opposite of that. So
and
what
you're
we have today,
100% going to have people experimenting with where to be on the risk curve. And some
but I
people
think we
are
can
going
just
to
go back to the 1800s. That's what I always say is in the 1800s, we had 50% deflation and we didn't have Bitcoin. And we had fractional reserve banking, but we had free banking. The government wasn't involved. There were no bailouts. Each bank issued their own currency for many decades in the 1800s, and it worked very well. So and I totally get it. I totally get the argument, the debate, even in the Austrian community, between fractional reserve banking and full reserve. That with full reserve, yes, you're going to limit growth, but you're not going to have boom busts. And in fractional, you're going to have more boom busts, but you're going to expand growth, and you're going to be running on all 8 cylinders. So which do you choose? What's better long term? And then, but I think that we now, and a lot of Bitcoiners, conflate fractional reserve banking as a product of the free market with what we have today. Which is like a complete fiat system where you have all these bailouts and you have moral hazard and you've got the Fed pushing everyone out the risk curve and doing all these things. And those two dynamics aren't the same. So my argument is that I just think that the optimal would be getting the government out of absolutely everything and then going back to a fractional reserve system that was a product of the free market, but something that was just, and it could be a bank, it could be a lending, just a pool of money. And that's all a bank is at the end of the day. And if your base layer is Bitcoin or gold or maybe a hybrid of both,
Yeah.
I think that's probably the best that we can do, like in an imperfect world.
I
But
mean,
when
it's your asset pile versus what you've lent out, right? And you're going to have Bitcoin, and you're going to own some real estate, and you're going to have some gold, and you're going to have claims on a bunch of people owing you money. And if you're financially stable and financially healthy, then you're not going to have a bank run.
Yeah, but
and if you so
right, but again, that takes us back to where we were in the past. And if I make a claim, as an example, on Twitter, where I say that, listen, in order for us to move into this direction where Bitcoins could have a chance of being global money, you're going to have fractional reserve banking, or you're going to have fractional reserve lending. I should say that, and paper claims on Bitcoin.
This isn't so. If you read the writings from like 2009, 2010, 2011 of Satoshi Nakamoto and Hal Finney, who was the second guy on the network, they talk about this all the time. And what they kind of forecasted was that you would see way more financial institutions in a Bitcoinized world of smaller size. With less need. It's really, I mean, I always call this the bright orange future, because that's also what I forecast, what you're talking about, a return to kind of sound money and kind of free markets. That is what I see. And I also see this steadier and higher average with less volatility, productivity growth being ushered in the second half of the century, provided that we win the race and don't sort of see boots on necks, 6102 style attempted confiscation and sort of a war on Bitcoin and Bitcoiners, which could only be coordinated in any effective way by the US government. So as long as we win this race to adoption of Bitcoin and keep on converting senators and reps and agency people into Bitcoin fans, we're never going to have to fight a war. This will be, a very peaceful transition and soft landing for the dollar. It'll just demand and supply will decrease, in lockstep as Bitcoin rises. And, we'll probably live alongside a bunch of fiat currencies, the remaining strong-ish ones. 15, 20 years from now, you'll just have two prices on the price tag. It's not that big a deal.
Okay, so I think we're pretty much we're saying the same thing, and it just goes back to kind of which is better, full reserve, fractional reserve, and what will the free market produce or choose, and that's just something that we've just got to wait and see.
You just may see something more like 3-to-1 or 5-to-1 or something like that instead of 30-to-1.
Yeah, exactly. And then people can choose, hopefully with the more transparency with the balance sheets, people can choose which pool of money or which guy at the top there, or gal at the top that's allocating those funds is going to be most prudent and in line with their priorities. That's for sure.
100%. Yep. And I think you'll actually see, bankers will choose to do business with people. They'll choose their customers too. So the really good banks will be selective about who they bank with.
Yes, and
or who they allow to bank with them, I guess, like it used to be.
Yeah, I don't want to get too far off on a tangent because I could really get in the weeds here. I do get concerned about global liquidity for the global economy if you have a considerable percentage of Bitcoin in self-custody. Because
so just remember you can bring that to market in minutes anytime that you want to. Like if there's ever an opportunity that has a good return that is enticing, all of that Bitcoin can be brought to market and invested at any time.
I realize that. I just wonder who's, if you're the average Joe right now, and which would need to be a part of Bitcoin if it wants to compete and become global money. I just don't know how many of them are going to have the ability to do due diligence on a corporation that needs a bridge loan or mezzanine financing that's halfway across the world, and they don't understand the business model, they don't understand the balance sheet. It seems like we kind of get back to where we are today, where we do have hedge funds, we have investment banks, we have pools of money, if you want to call them banks, because people have their Bitcoin, they want to get a return, but they don't want to really do it themselves. But then that introduces counterparty risk, and that goes against what you're seeing right now on Bitcoin
We're
Twitter.
We're gonna keep a lot of the features of historical financial systems and even the present day financial system.
Yeah.
Will apply to Bitcoin. And in a lot of cases, you'll just be replacing the symbol. It won't be the yuan or the yen or the euro anymore, and it'll just slot a B in, and it'll be the same companies and the same systems.
Yeah, right.
But it will all work better because it's Bitcoin, and no one controls the money, and no one can print more of it, and no one can cheat. There's no Cantillon effect. You can't cheat the Bitcoin system. And I think that will make everything work better in the long run.
To be clear, they can't create more of the base money, but they can create more of the broad money.
They absolutely can. Yeah. But again, you will be putting yourself way out on the risk curve, and people will hold you more to account. There will be much more transparency. If you don't answer a question about proving your reserves, that's a data point. If you do answer the question and you show that you have the goods, and you show the deeds to your real estate, and you show, the asset, whatever, the auditing of your gold supply in your vaults, and you show the actual Bitcoin and you prove that you can, send transactions from the keys that show your Bitcoin balance, and somebody else chooses not to, well, guess what? I'm going to be willing to accept a lower interest rate, in return for giving my Bitcoin to the one that has the goods. So they have a cheaper cost of capital.
Yeah, it's just good old fashioned building a brand that people have faith and confidence in.
Exactly. Thank you for the swan shell.
Yeah. All right. Well, okay. So next question here. I want to be cognizant of your geez, we've been going almost an hour.
Yeah. Let me just check and see if.
I can let you go, Cory.
No, we're fine. Whatever you want. Yeah.
Sure. One thing that I've tried to think through is how any fixed amount of money, whether it's gold, silver, Bitcoin, doesn't matter, how that could eliminate inflation in a world of sovereign entities where the money supply could increase rapidly from year to year due to importing and exporting. So as an example, you've got, let's say, Japan with a huge exporter. They have a massive trade surplus. So a lot more Bitcoin would be going into Japan, which would increase their money supply. And at a local level, let's just say the money supply doubled in 1 year, the supply of Bitcoin, gold, silver, whatever, then you could theoretically see a significant increase in consumer prices, even with a fixed amount of whatever it is that you were using.
Yeah.
Do you think that's possible? And it would just balance out, though, in the next year that they would be less competitive because those prices went up, and therefore more of the Bitcoin would flow out?
It would flow out. Yeah. What you would see is you would see them start to invest in Korea, Northeast China, and Thailand and stuff like that. And they'd take more vacations, and the Bitcoin would get distributed. Okay. That's what would naturally happen. Now, Bitcoin is going to solve a massive number of the problems, the deepest problems that I think we have globally. And I'll state that as a fact. That's what I actually truly believe, and I think understand is going to happen. It's also going to create new problems. Any disruption does. And those problems are going to be opportunities for people to come in and solve new things that we've never thought about. One thing that I think we kind of have to be prepared for the rest of the century, to get sort of geo macro on it, is, a lot of countries are just propped up by having a fiat currency and capital controls. And they're going to be at such a disadvantage versus countries that actually Bitcoinize, if they try to keep that going, that they're just going to face mass immigration, just, with an E, just people just leaving, just picking up and leaving, because they're just going to be over it. And so I think you'll actually see a ton of weak countries just basically collapse, merge, get taken over, beg to get taken over, kind of like almost like a voluntary colonization. They'll ask to be under the arm of somebody else because they just, they realize that they never should have been this tiny little landlocked, crappy country in the first place.
Yeah. So on that note, Cory, what are the opportunities? I know you touched on it briefly there, that you're starting to invest in this next step, the second or third step that you don't think is here now, but you're seeing it kind of rapidly approach in the future. And I think this is what I get most excited about. Although, people on Twitter don't can't really see this, but it's that, you know, the phoenix is now rising from the ashes, or it may in the very near future, and that presents massive opportunity. It was like this with the railroads, like this with the internet,
Yep.
and it's, you know, most likely going to be exactly what we see. So, you know, what are you looking at to take advantage of this opportunity?
Yeah. So you hit a couple of things that are just like top of mind for me all the time and that are just part of my own sort of mental lattice work, I guess. One is that this is not a single technology. So a technology S curve, like the introduction of the iPad, changes maybe one industry, and it has kind of a rapid adoption that might take, you know, could be 5 years, could be 20 years, social media, things like that. The book Technological Revolutions in Financial Capital by Carlotta Perez, 20 years old now. It's crazy. I think I read it for the first time 10 years ago, and I've reread it, you know, 3 or 4 times. And this explains that a technological revolution is something so broad that it actually changes all industries. And so this would be like the advent of mass production, sort of symbolized by the first Model T rolling off the line in 1906. This would be the information revolution, started in 1971, interestingly enough, symbolized by the first Intel chip rolling off the fab. And these things take 40 to 80 years. You know, they're not quick adoption of like a single technology. It disrupts everything. I think railroads were one of those, steam power, the Industrial Revolution. So there've been 5 of them in her framework as she defines them. There've been 5. I think Bitcoin is the 6th. And I think what we're seeing is, you know, it's either a rocket booster second stage that makes the information revolution take a lot longer because you were able to turn money into pure information, or it's a new one that deserves its own cycle, essentially. But either way, it started in 2008, and we're in, you know, year 14, and we got a long way to go. And so, you know, be ready for the long haul and stop thinking that we're going to be in this hyper Bitcoinized future by 2030. Like it's early days. And so then for the first part of your question is like, what are we building here? It's the internet of money. Bitcoin network is just the base layer. It's layer 1. You're going to have layer 2, 3, 4, 5, 6, 7, 8. You and I are talking on video over IP on a website, right? This is like layer 7 or layer 8 on top of internet protocol. Yeah. So to expect that we're going to be all the way, you know, identifying all potential future use cases for this, you know, 50 years from now is ridiculous. This is 51 years after the advent of the information revolution, and we're finally doing, you know, video calls every day, all of us, which we all, you know, some of us were doing that 10 years ago. Most of us really started doing that in 2020, kind of as an everyday thing, with COVID. And so layer 2 of the internet of money is the Lightning Network, right? Which is the medium of exchange network for Bitcoin. And it's still in its infancy, and it's getting bigger every day. It's actually growing exponentially. And there are some incredibly exciting things being done with Lightning, with Bitcoin on Lightning, that we humans have never been able to do before. And so there are all these opportunities getting created that no one's ever, you can, you know, I could, if I was a super fan of this show, for every second that I'm watching your show, I could just be streaming you a fraction of a penny. Yeah. You know, they have millisats on the Lightning Network, which is 1,000th of a Satoshi, right? And a Satoshi is already 1/100 millionth of a Bitcoin. So these machines can pay each other, utility bills, all the subscription revenue. So that's like just one example. Yeah. But also you can send a tiny amount of money peer-to-peer to any other human on the planet. 8 billion people. So now you're breaking down borders, you're getting rid of friction. You're saying like, hey, you can get somebody to just do a graphic design for you. And you can even farm it out and get 10 people in Southeast Asia, Philippines, Pakistan, wherever, and give them each $5 to take a crack at a great logo, and tell them you're going to give them another $5 if you select the winner. And now you've got a beautiful logo for $55. Mm-hmm. And you just pay them over Lightning.
Yeah. Yeah, I watched a video last night of Mr. Beast, and they were kind of throwing out a hypothesis that he could sell fractional ownership of each one of his videos. So if a video costs, let's say, 3 million, and he only wanted to put up 2, and he could sell the fractional ownership of the other 1 million, that would give you rights to the ad revenue that video would produce over the next, 20 years or something like that. And
Yeah,
that actually would be a fantastic investment if you had
it
one of
could be.
Mr.
Yeah.
Beast's videos.
It could be. Yeah. So that would be a combination of something decentralized, which is like the actual payment rails of how you make those payments, with something very centralized where you have to trust the third party that keeps the records. You trust them not to screw you.
Yeah, right.
This is where a lot of the crypto scamming comes from, because they do things like NFTs, which are not decentralized. They require a third party to market the heck out of these things for them to have any value. You can't bring laws in the court system into cyberspace. They exist in meat space. So if you want to enforce IP rights or revenue streams or royalties or any of that kind of stuff, it requires the meat space legal system. And so all these promises from the smart contracts and the NFT people and the crypto people about, disrupting that space, at best, you're looking at like, incremental improvements to financial rails or financial IT,
It's still
but
a lot of
not the
counterparty risk.
trustlessness. Tons.
And
The
what you
same
were
as always.
talking about before I interrupted you there, that
Yes.
system, or the kind of the benefits that you were discussing, or the
Yeah.
next wave of technology, that wouldn't have the same level of counterparty risk if any.
The payment doesn't
counterparty risk
require any counterparty risk. That's the
Okay.
key, because it's literally peer-to-peer cash, as stated in the white paper. And the Lightning Network makes that without the Bitcoin network fees and without the slowness of waiting, 10 to 30 minutes or 60 minutes, depending on the size of the payment, just to get, comfortable with transaction finality. It lets you do that payment instantly, trustlessly, for small amounts over the Lightning Network. They would still need to trust that I'm going to send them the payment, or if I send them the payment, I still have to trust that they're going to deliver the work. That's when you have, centralized third-party websites with ratings and examples of their work. And, have I always paid the things that I promised to pay? Do I have a reputation? None of that stuff changes.
Yeah. Okay. So if someone,
This is money. And all these crypto scammers are saying like, hey, we can use the underlying technology, but without blockchain, time chain being used for money, the way to think about it is it's an airplane wing without the airplane. Cool. Makes a cool table. We've had tables before. Maybe it's a cooler table and you like it better and you want to call it something different. You want to call it an NFT. Well, we've had private keys with trusted third parties before, and websites and art. We've had all those things. You can market it as an NFT, but it's not something new. You can market smart contracts as something blockchain-y, crypto-y, but really it's just if-then statements in computer code. Like we've had computer code for a long time.
Okay, so you're seeing opportunity, the next wave of opportunities in the second layer.
Is better money the most important asset, half of every transaction for all humans historically and today? If better money for 8 billion people, the best money we can ever conceive of, isn't big enough for you, like, frankly, I don't think people understand it. That's what I think it usually comes down to. Like, if that's not exciting to you and you think that you have to do something else with the technology, you actually don't understand what Bitcoin is.
Yeah, I agree. I think that's a common flaw with human beings, is that they really don't know what they don't know. And I think to a certain degree, we all fall into that category.
We sure do.
Can you go ahead and explain what your company does?
Yeah, absolutely. So Swan Bitcoin, check us out at swan.com. We're a Bitcoin financial services and technology company. We act as a broker of Bitcoin to retail through the Swan app. You can check that out in the Play Store and the Apple Store. We have swanprivate.com, which is for high net worth individuals and family offices and corporations around the world. Thousands and thousands of customers there. That's great because we actually have some of the world's top Bitcoin experts are actually your one-to-one MD, your managing director that handles your account personally. You can hit these people up on WhatsApp, text message, do phone calls, Zoom calls, and basically get anything complicated with trusts and treasuries, and obviously your personal accounts. We have a Swan IRA for folks in the US to get it into their retirement accounts. We have Swan Advisor Services, which is for the wealth management channel in the United States. So this is RIAs and financial advisors selling Bitcoin through to their end clients and putting it in their portfolios. Just a really robust, interesting, and cool financial services company. And I think, we're probably the best known of the Bitcoin only companies at this point. becoming a pretty strong global brand. We'll actually have card purchases available globally, so credit and debit cards for 130 countries outside the US in a month or so. And then, yeah, we're charting a path to get involved in the world of medium of exchange over the next few years as well. So we'll actually have a Lightning wallet built into the Swan app by early next year, and that'll be available globally. And then I'd say, probably the last interesting thing is hit us up if you're interested in building Swan functionality into your app or site. We have an API that about 25 companies are using right now to have Bitcoin on-ramps in theirs. And then, you keep on coming back to self-custody. We acquired Spectre wallet or Spectre Solutions a few months back, which is one of the best known multi-signature self-custody solutions in the world. Spectacular team, great engineers, great leadership, and they're part of the Swan team now as well. So yeah, we're almost 100 people now on 5 continents, tens of thousands of happy users. And then we also put on a great inaugural conference out here in Los Angeles about 3 weeks ago, the Pacific Bitcoin Conference. And I highly recommend getting your tickets early for that in 2023 at pacificbitcoin.com. Did I shill hard enough, George?
No, hey man, congratulations on starting just a fantastic business. I retired in 2012, but I understand how hard it is to start something from the ground up.
Yeah.
And
man, my wife does too. She liked me being in semi-retirement for about 4 years. And then I was like, babe, I got to do this Bitcoin thing. Like, I think I got to do this thing. She was like, oh my God, here we go again.
Yeah. Once it's in your blood, man, it's fine. You can't get it out,
fine.
Right?
You're an entrepreneur. I watch your channel's growing like crazy, man. It's great. I've been a fan for a long time. I think, a lot of us in the Bitcoin space try to emulate what you're able to do with your whiteboards and your charts and the simple 1, 2, 3 and everything. Like, it's so down to earth, but so spot on. I just think you're a great educator, and I appreciate getting to spend some time with you. And by the way, I don't know if you remember, you did do our show last year. You did Swan Signal Live one episode as a guest. So I just wanted to thank you personally for doing that.
Yeah, absolutely. Absolutely. And I got to give most of the credit to the editors there. All right, Cory. Well, thanks a lot for your time, buddy. I can't wait to do it again.
Sounds good. Thanks, George.